I would like to take this opportunity to try to figure out what are some of the trends in the global economy after the global financial crisis and how they impact the very important objective of your country of achieving the goal of becoming one of the top 30 economies in the world, a goal that you can achieve if you're going to be implementing this program of long-term economic transformation. I would start with these trends and identify very quickly 10 of them. After the global financial crisis, the recovery in most industrial advanced economies was anemic, subpar, below trend, because of a painful process of deleveraging after too much private and public debt. While the recovery in most emerging markets was strong, because these emerging markets have higher potential growth and did not have the same balance sheet problems as advanced economies. Second trend, there has been a rise in the share in global GDP and growth that is coming from emerging markets, because potential growth in emerging markets is 5–6%, while in advanced economies only 1–2%. And with this greater global power, economic, financial trading of emerging markets, they'll also have greater political and geopolitical power. Third, there is major amount of technological innovation in the global economy. New energy technologies, new biotechnologies, new information technologies, new manufacturing technologies, and that's going to be a source of high productivity growth. Four, however, a lot of this technological innovation is capital intensive, is skill biased, and is labor saving, and therefore both advanced economies and emerging markets will have to figure out how to create jobs and not just profit and productivity. Fifth trend, there are demographic trends. There is aging in most advanced economies and even in some emerging markets like China and Russia, but there is also population growth and a demographic dividend in most other emerging markets. Sixth trend, there is now greater globalization and greater trade, not just in goods, but also in services, in capital, in labor, in information and technology. But we have to manage this globalization because there is already something of a backlash against trade and globalization. Seven, there has been some rise in income inequality because of many factors, technology that saves labor, trade and globalization, and so on. So it's important to have inclusive economic growth, otherwise there'll be a backlash against it. Eight, unfortunately, there is a lot of socio-political instability, and there have been also a rise in geopolitical risk. Look at the Middle East, the Russia-Ukraine conflict, what's happening right now in Hong Kong, some of the territorial disputes in Asia. And nine, there is a demand for natural resources and there is some scarcity, but there are also environmental risks given the global climate change, and it's important to have sustainable development. And 10th, both advanced economies and emerging markets have to do structural reforms. Japan needs them, Europe needs them, US needs them, but also emerging markets need structural reform to maintain long-term economic growth, opportunity, and make sure that growth is sustainable and it's inclusive. Now, this is the background. For the last decade, emerging markets were growing very strongly between 2003 and 2013, but now their growth rate has somehow slowed down, and the question is whether it's cyclical or is it structural. Why they were growing very fast? First of all, most of them did structural reforms that were market-oriented, what the World Bank refers to as first-generation structural reform. Secondly, they had sounder macroeconomic policies, monetary and fiscal. But third, they were also lucky because there were a series of global tailwinds that sustained growth of emerging markets. China was growing 10–11%. You had zero policy rates in US and advanced economies, and investors with this liquidity were searching for yield. And you had a commodity super cycle that was booming, not only because of the growth of China, but also a number of other factors. Why since last year there has been a slowdown in emerging markets? Those global tailwinds are becoming headwinds. China slowed down from 10% to 7%, potentially lower. The zero policy rates of advanced economies, however, slowly are going to finish. The Federal Reserve in the US are going to start raising rates sometime next year. And now the commodity super cycle might be over, not just because China is slowing down, but because many years of high prices have led to increased investment in capacity. So we've seen some softness, at least in the short run, in commodity prices. Now, the medium-term outlook for emerging markets still remains good. There are many trends that are positive. One is the process of urbanization. The other is the process of industrialization and economic diversification. There is the demographic dividend of having population growth, and if you give skills education to them, that's a source of economic growth. There is the rise of the middle class of a consumer society in this emerging market, demand for goods, for services, for housing, for infrastructure. Fifth, there is also this developmental catch-up. From low levels of per capita income, you can grow fast for a long period of time. There is the ability to adopt the technology developed in advanced economies, but there is also the ability of many of these emerging markets today to innovate themselves. China, India, many others are becoming innovators, and Kazakhstan can also become an innovator. And as long as you adopt a structural reform that increase potential growth, the second-generation reforms that the World Bank refers to as micro-oriented, increased productivity bottom-up, then the constraints to growth are going to be reduced. So those are the positives. However, there are medium-term challenges that these emerging markets are going to face. First one is how to avoid a middle-income trap and the resource trap. The second one, given technology that saves jobs, how to create a society where there is enough job creation for all. And three, how to make sure that this growth is inclusive, that doesn't increase inequality. Let me talk specifically more about the question of the middle income trap and the resource trap. At low stages of economic development, it's easy to grow 5, 7, 10% per year for many years, because if you have the sound macroeconomic framework, if you do basic structural reforms, then you can mobilize labor and capital and resources and grow very fast for 10, 15, 20 years. That's easy. However, when you reach a middle income status, going from middle income to higher income status implies innovation, technology, creativity, total factor productivity growth. Moreover, countries that have a lot of resources, again, by exploiting natural resources, can grow very fast for a period of time, but there is a risk that you're going to end up into the resource trap, that if you're not able to diversify away from natural resources into industry, manufacturing, services, knowledge, you're going to be constrained in your ability to grow in the long term. So over time, you have to avoid the middle income trap, you have to avoid the resource trap. And there are plenty of success stories. Countries in emerging Asia have been able to go from middle income to higher income. Countries like Korea, Hong Kong, Singapore, Malaysia, Japan, but also other emerging markets like Chile, Mexico, Poland, or some Gulf states. Many countries have been able to move away from resource orientation to a more diversified economy. I think among advanced economies, countries like Canada, Australia, New Zealand, Norway, but even some of the Gulf states like Dubai and so on. So there is an opportunity to be able to avoid the middle income trap and to avoid the resource trap. What are the key elements of that are also important, of course, for the case of Kazakhstan? I would say there are at least 6 factors that make sure that you go from middle income to higher income and you diversify your economy. First of all, you have to invest into various forms of capital, human capital, physical capital, knowledge capital, infrastructure capital, to increase your endowments. If you have a lot of resources, that's great, but you have to increase the endowments of other resources to make sure that your growth continues and is diversified. You have to increase the share of GDP that goes into savings and investment. Secondly, you have to maintain the right balance between the private sector and the public sector. In any society, the public sector has an important role in providing a variety of public goods like education, healthcare, old age pensions, and you name it. And there's an important role also that state-owned enterprises can play in the economic development and growth of a country. However, there has to be the right balance between the private and public sector, moving in the direction of excessive state capitalism, where you have too much role of state-owned enterprise in the economy, too much role of state-owned banks in the allocation of credit, resource nationalism, and trade protectionism is not going to lead to long-term economic growth, as some of the examples suggest. And again, as was pointed out by other speakers, state-owned enterprises can be efficient, can be sources of productivity growth if they're well managed, if they have the right corporate governance, and if they have the objective of increasing their own productivity. So it's key to have the right types of state-owned enterprises. Third of all, it's important to organically diversify your economy and move gradually away from resource orientation to industrial and manufacturing services and so on, and eventually become an innovation and knowledge economy. Now, this process of diversification requires having an economic plan, but you cannot plan everything in advance. You're not sure what are going to be the success sectors and the success firms. And therefore, if you emphasize excessively top-down industrial policy by picking winners, whether they are firms or sectors, sometimes you may make mistake. Instead, creating an environment where you reduce the cost of doing business, where you allow competition, where you allow development of the private sector, and you have an environment in which you provide the public goods and infrastructure that allow then the winners to emerge naturally from bottom up, is going to be one that's going to be more successful. Fourth element is that you have to be an open economy, openness to trade and foreign direct investment. That's key. And that trade opening can occur both at the regional level, but also at the multilateral level. Having trade agreements with a group of countries close to you is a source of trade creation, but it can also lead to trade diversion if the external barriers against the rest of the world are too high. And you have to make sure that regional trade integration is consistent also with diversifying the sources of your own trade activity. You don't want to be trading only with countries that have low economic growth, where next door China, Asia, and the rest of the world are growing much faster. So having an open regime to trade and foreign direct investment is also important. Fifth, to become truly a knowledge society that is growing in terms of innovation, entrepreneurship, creativity, and new industry implies having the proper social and institutions, broadly speaking, are going to lead to that type of innovation. Again, investment in human capital and an open society that is open to creativity and challenge the old status is going to be key important. And sixth and finally, having a growth that is inclusive is also important. If there is a rise in inequality, eventually that leads to social and political instability, and the question of inequality has become a problem both in advanced economies and emerging markets. And also inequality is bad because it redistributes income from those who have high marginal propensity to spend, consumers, households, and workers, to those who have a higher marginal propensity to save, that are high net worth individuals or corporations. So to have high consumption growth, you also have to have enough labor income. So it's important to maintain inclusive growth. So those are the 6 factors that matter. Now, Kazakhstan has achieved a huge amount of economic success with strong growth, job creation, provision of public services, economic diversification, reduction in poverty, but everybody will recognize that you are at the stage of a middle income. You are at a stage in which you are still relying a lot on natural resources, and the economic transformation of your plan, if you implement it, is going to be able and allow you to avoid the resource trap and avoid the middle income trap. And I think that if your economic program is going to be implemented the way it's achieving, in the next 20, 30 years, you're going to be able to achieve the economic success that leads you to the different level of economic development.